All right, good morning, everyone. Hope you got a nice big old cup of coffee, and that way we can get into things. So today I thought I'd try something just a little bit different. I know, fourth video on the channel, and I'm already experimenting. Look at me go. Um, so yeah, I'm trying to talk about some not top 10s today, like 10 articles. Trying to focus more on side stories, things that have fallen off, things that may be rising, and stuff like that. So, the usual. Make sure you like, share, comment, subscribe. I'm kind of interested to see what you guys think about some of these things, especially these first few articles. So let's get into things. So, numero uno, first up, the friggin' Pi network. I don't know if you guys have ever heard about this, but Pi is a phone mineable cryptocurrency. And it's kind of been floating around. This is an older article because it's coming up in different people's things. It's actually trending on Google search, but not a lot of people are doing articles about it, which I kind of find weird. But see, they updated it on the 20th. So the Pi network, you download the app, you mine it right there on your phone. You gotta turn it on every day. I do it. It's kind of annoying, but it seems to be gaining traction. 15K followers on Twitter, 60K likes on Facebook, followers on Instagram. You cannot actually trade the Pi network on any exchanges right now, but IOUs are trading for around 40 cents. I mean, that's not too bad for something you mine on your phone. So the idea behind Pi network is, well, for a lot of people who use blockchain and cryptocurrency, the networks are out of reach for common people. I agree. I can't mine Bitcoin in my house. That would be really loud. I rent. I'm not paying that electric bill, and my landlords would freak out. So I'm kind of stuck. I can't mine Bitcoin, and that's the type of thing that proof of stake is trying to solve. But for those people and those cryptocurrencies that still mine, what are they going to do? Well, Pi is mined on your phone, and you don't even have to have the app on. Literally, I log in once a day, turn the darn thing on so it starts earning, and I log off. You can join the network by contributing like that and go from there. So you're the user of a Pi mobile app who's simply confirming they're not a robot. On a daily basis, you validate your presence, and you can open the app and request transactions like making a payment in Pi to another person. I don't know anyone in real life actually uses this, and since the value of Pi is kind of like, I don't know at this point, it's not exactly something I'd be doing, but it is still a new thing, so as it develops and we get a more concrete idea of what Pi is actually worth, I could see myself buying and spending in Pi. Especially, once they bring in like QR codes and different things like that, so that way I can actually do things, and also make it so I can take Pi off of the app. Things like that. They've got these lovely faces: head of technology, head of product, head of community, PhD, and then not a PhD. Probably got a bachelor's or a master's. It's probably the marketing guy. As long as you're charismatic, you can pretty much do everything. FOMO. Never FOMO, guys. Please. Never, ever FOMO into anything. I really like dollar cost averaging. Pick the cryptos you like based off of long-term research. You get really excited about a coin one day, set everything up so you can buy it, and then turn off your computer, walk away. Come back a day or two later, look through everything a second time. If you still want to buy it, turn off your computer and walk away, and then come back a day later and do it a third time, then buy it. I'm serious. I did that. I FOMO'd into Tron. I FOMO'd into ARK. I've lost a lot of money in those coins. But other coins that I've invested long-term through dollar cost averaging and things like that have actually performed really well for me. So just be aware of that. You download, but yeah, so Pi, you download the app. You got to sign up with Facebook or your phone number, and you just do all this stuff. You can use an invitation code, which will be in the description below if you want to join a mine with me. And yeah, you just go from there. I get a notification on my phone once a day. Hey, you need to log into Pi and confirm you're not a robot. and it'll start mining. The more people who mine, eventually the less pi you will earn per day. So it will start to decrease, but it will hit a floor. So the idea is it's not impossible for you to mine as a way of earning a passive income, but at the same time, eventually you are not going to be able to get it in large enough amounts to really like make a difference. Now, let's say you can get to 10,000 pi before they do it, and pi eventually goes to $10. That's $100,000 that you're getting just by clicking a button once a day. But again, no one knows, but it's pretty low risk as far as things go. So, it's worth trying. Oh, look, old Sean Logan. You can probably watch his video for something a little bit more in depth, but I gotta get moving on. So number 2, Vechain. This is interesting. It's not a big story. It's not crazy, but it is a great example of how cryptocurrency and blockchain is starting to be used in everyday transactions. So Vechain has actually been very helpful in the process of helping medical professionals respond to coronavirus and the process of communicating medical data rapidly while sustaining data security. So that's kind of cool. 1,200 people downloaded the CERT app, and the La Corona airport have asked to receive their novel coronavirus test results on it, which is powered by Vechain. This is cool. This is what we want. It's not going to send Vechain through the roof price rise, but it does create adoption. It does create the word of mouth. It's really cool. So this app, secure delivery of patient information, you can store their medical data, and it can be shared with the permission of the patients as needed. So that's nice. It's secure on the blockchain, so it's unhackable, untakeable, and then you can authorize other people to look at it. That's really cool. And the record is there. You never have to worry about it transferring to a different network, or like me, all my childhood stuff is on paper in a file cabinet, and the pediatrician's office I went to burned down, so I literally have the only copy of my medical records. I should probably scan those into a computer, actually. But I digress again. So, really, really cool, but not life-changing. Like, this type of thing, we're going to start seeing more and more and more. But hey, let's move on to number 3. Again, this is another one. I hold Nexo. I bought it when it first came out. I've lost a lot of money on it. I'm finally starting to get back to even. But Nexo is kind of positioning itself as a Crypto.com competitor. If you guys don't know, Crypto.com, it's got a phone app, and you can download it and you can store coins on there and earn interest on them based upon terms you set up. Nexo is doing things similarly. They have a credit card, kind of like Crypto.com. You can use it, and you can actually borrow against the balance you have on the site. So if you've got, $1,000 in crypto on Nexo.com, you can borrow against that with the best borrowing rate starting from 5.9% APR. Not too bad. This is published by them. It hit my inbox on Blockfolio 2 days ago, but it was published on the 3rd. So why they're delaying about putting out this news, I don't know. But you can now do it you can now withdraw in USDC, USDT, and a bunch of different fiat currencies. It's not bad. No fees. It's automated. I use them. It's a pretty seamless transaction. It's a nice website. It's clean. It's simple. You can clearly see what you're doing. It's interesting. So they have all these different things you can do and all this stuff. And the reason I wanted to bring it up is because how they're positioning themselves as a Crypto.com competitor. So here is Nexo's website. So you can earn interest up to 10% on your idle assets. 10% is for the stable coins. Earn 10% interest on fiat currencies and stable coins, and 5% on XRP, XLM, LTC, BCH, and EOS. And then Bitcoin and Ethereum are going live in the upcoming weeks. It's kind of nice. So you can earn 5% and you can earn 10%. You do have to hold a little bit of the Nexo token for you to be able to get that. However, Nexo is a business, the way they say they're running things is 70% of profits will be invested back into the business, and the remaining 30% will be distributed as a dividend to any Nexo holders. So kind of like a security stock type thing. Nexo's fine with that. It's interesting. I have gotten 2 dividends from them because I've held for a very long time. They've not had a dividend in a year, though. So my interest in them was kind of waning until I started noticing that they're doing this. I mean, it's kind of nice. You put 10%, that's good. You got, $1,000 sitting in a savings account. It's earning less than 1% interest. You can bump it over to USDC, transfer it to Nexo, or you can transfer it to crypto.com if that's more your speed. Personally, I would put your money in a multiple different places. But yeah, if you put $1,000 in here in a year, you'll have $1,100. But the interest is paid out daily, so it compounds a little bit more. It's not too bad. But I just want to put out, I'm not being paid by Nexo, I'm not being paid by Pi, I'm not being paid by Vechain. I'm not being paid by anyone. If someone would like to pay me, feel free. But hey, let's move on. IOTA. And then here we go. Another example of blockchain infiltrating our world. It's really cool. So, the German Banking Association wants a digital euro. It wants to compete with the United States and the dollar and China, who we all know China's got their own currency in the works, a nice little digital one, so we got to keep an eye on that. Especially with, Libra cropping up again. No one wants Facebook to launch Libra. 2 billion people? No. China doesn't want it. The United States doesn't want it. Europe doesn't want it. It's going to happen still because freedom, but they don't want it. China's already testing, which we know. So the idea behind this is IOTA has this thing called IOTA Colored Coins, ICC. Basically, an object can be assigned a specific IOTA token by means of coloring or marking in the hash. They can digitize any kind of asset or property, shares, stocks, bonds, title deeds, land, real estate, or even financial products like a digital euro. Oh man, and they've already applied for the issue of e-krona. So they're moving. Again, this is not based off the IOTA token, but the IOTA network, their tangle, quote unquote. It's just another way cryptocurrency and blockchain is getting into our world. And that's the cool thing. That's what we want. We want I keep trying to say Bitcoin. We want a blockchain-based world where everything is asset and tokenized and networked and secure. It's a heck of a lot easier to say land, keep your land and not have to worry about a land grab in some countries when it's on a blockchain. Because it's not my word versus his word, because there's no frickin' records, because it's the middle of nowhere in a country that's poorly developed. It's on the blockchain. Now, will that still prevent you from, make you keep it? Maybe, maybe not, but at least eventually your children or your children's children might be able to lay a strong claim to it. So let's move on. Again, the theme of this video, infiltrating the world. Binance, buying crypto directly via Visa, credit, and debit card in Africa. Tomorrow. How about that? It's really nice. So, users in Kenya buy Bitcoin and other cryptos in Kenya shillings directly. That's kind of cool. So, Africa, Middle East, Asia, Pacific accounts activated. Asia, Pacific on the 23rd, the Middle East on the 23rd. Sorry, Asia on the 22nd, Africa on the 23rd. They'll be able to buy Bitcoin, Ethereum, BNB. I'm assuming that's Binance's USD stablecoin and Tether. That's kind of cool. They'll be available for direct purchase and deposit in the account in seconds. I bought cryptocurrency using a credit card on Binance before. KYC is annoying, but unfortunately necessary in this day and age. It wasn't that bad. But again, service is expanding. blockchains are starting to be used in practical applications. This stuff is here to stay. Can't have any type of 10 without mentioning Ethereum. The support zones, technical analysis, all this back and forth. I have mixed feelings on technical analysis because all these graphs and charts and patterns make sense when you're just looking at the graphs and charts and patterns. But real life affects things. Yeah, Ethereum's testing this 228 schedule, and things might drop. But if Vitalik comes out right here and is like, oh yeah, ETH 2.0, we're dropping it in a month, it's going to rocket up based on that news. So you can hedge your bets with TA, but just be aware, life happens. Vitalik might come out and say, oh yeah, we're not going to be able to release ETH 2.0 until 2022. And then I'll... That's just how it goes. So the new week ahead, like Bitcoin, there's a 50-50 chance it could go either way. Well, no, I'm not going to curse. I'm not going to be angry. You know, it's been a slow week. Cryptocurrency markets are actually up right now. And we're looking at Bitcoin at 9,300. People are waiting for that rocket. And people are betting for it, against it, but everything is focused on Bitcoin and this $10,000 mark, and Ethereum seems to be closing in on the $240 to $50 mark. We'll see how things develop. All right, the daily hodl. Oh, God. Just spell things right. It bothers me. But hey, so Chainalysis, which is a fun little firm, they say 20% of Bitcoin's total supply has not moved for 5 years or longer. So the number, that's what the firm considers. If it hasn't moved in 5 years or longer, they consider it lost. Now, they're probably right. A decent portion of that 20% is probably lost, but I would probably say the actual amount of Bitcoin that is gone forever is probably closer to 10%. There's probably another 10% of people who still have their wallets, still have the private keys in their house in a file cabinet somewhere. And while they may have forgotten about it, their child may discover it, their wife or husband may discover it. And then having those conversations, as long as they don't throw it away, can lead to some people literally striking it rich based off of cleaning out their old crap. Hey. Yeah. Oh, and also, less than 19% of Bitcoin mined is used for trading. So they're saying about 340,000 people are actively trading Bitcoin, but the rest, as we talked about the other day, almost 60%, over 60% of Bitcoin is being held. That's good. The less supply, the more demand, the more the price can rise. All right. Moving on to the next one. So, India. Their firms are continuing to expand despite rumors of another ban. Supreme Court of India overturned a ban that the Royal Bank of India put out there. Royal Reserve. But 2 months later, the market, so it overturned. In less than 2 months, the market is facing yet another uncertainty as reports surface the government will be planning to introduce a law that will actually ban it. India. Worry about China. Seriously. But most crypto startup founders believe a ban won't happen, so they don't think there's anything to worry about, but the possibility is unsettling, to say the least. But despite rumors, Paxful also expanded its operations in India, and they're doing all these type of things. They're trying to eradicate poverty, boost economies, and create jobs in the post-COVID economy. I mean, obviously we're all going to say India shouldn't ban it, but again, some governments like control, and cryptocurrency is threatening to take that control away from some people if they don't lean into it. And then to kind of wrap things up here, we got to talk about decentralized finance. Oh my God. DeFi yield farmers. Ugh. Ugh. They're saying they're raking in 100% annualized yields. Jeez. So this lovely yield farmer getting comp, Ren, and Ethereum. And it's all these things, but excuse me. Just as a refresher, decentralized finance, or DeFi, is an ecosystem of decentralized apps, enabling anyone with an internet connection to access a variety of financial products and services spanning crypto assets, margin trading, financial derivatives, synthetic assets, algorithm trading, and lending markets. So, one of the first mainstream DeFi use cases is high yield interest income, in which users deposit their crypto to earn a high rate of return, often 100 times higher than a typical bank savings account, i.e. 10% versus 1%. Nexo, while not a DeFi app, is kind of similar. You can earn, freaking 1% or 0.1% of the money sitting in your savings account, which is less than the rate of inflation, so you're quite literally losing money, or you can earn 10% and come out ahead. So, for example, of one of these DeFi things, a user who lent out 1,000 DAI and took out a loan for 250,000 of BAT would have generated 77.84 APY in comp rewards paid out daily. This can all be done in InstantApp's Maximize Comp Mining feature. Users need to be mindful to maintain the appropriate collateralization ratio to prevent liquidation of their underlying 1,000 DAI, but remarkably, comp rewards exceed the cost to borrow BAT, making it profitable to borrow cryptocurrency. And we're going to take just a second and kind of just stew on that. Okay, so yeah, here's this DeFi dad guy. He's got like 8 videos, 600 subscribers, because he's talking about some cool stuff. I watched this video. Most of it goes over my head. I'm actually going to watch it again after we get offline, because I kind of want to see what he's doing. I don't think I'm going to be jumping into this. It's a little bit over my head, and I don't need to be losing cryptocurrency assets. I got a kid on the way. I don't need to be losing money because I don't know what I'm doing, and then have to look at my wife and go, yeah, so. But yeah, no, yield farming is the new thing, apparently, and they're going off of these things, going back and forth. It is quite literally a very long read. Vitalik is kind of trying to pump the brakes on this a little bit, which I do agree. Interest rates significantly higher than what you get in traditional finance are inherently either temporary, arbitrage options, or come with unstated risks. And that is true. Like, that sentence I read up here, I don't know about you, but I understood, none of it. I'm sure there's some people who are making good money. And then comp, literally, it went from $16 to $360 because it's being listed on Coinbase. So if you own Compound, good for you, buddy. You saw something the rest of us didn't. I hope a lot of people made some good money on it. And I think in a video later, we might look into Compound a little bit more and kind of talk about it a little bit. But yeah. So, are these products inherently 1,000 times riskier? Probably not. And thus savvy investors, not me, and traders are cashing in on these arbitrage opportunities. These rates will naturally decline over time as the space grows in size and volume and DeFi products become a battle tested and hardened. But yield farming is the catalyst for increasing user adoption. Believe me, I'm thinking about it, even though I really don't have the money that I can devote to it, just because 100% returns. So you could put $1,000 in, have $2,000 the next year, or put $1,000 or put 10 grand in, have $20K the next year. I mean, you're probably gonna be paying like $5,000 of that in taxes at least, but still, that is pretty insane. And it's trying to catalyst increasing user adoption, acclimating users to the notion of unbanking themselves. I mean, I'm trying to get my money out of traditional banks as quick as I can, but the hard thing is finding places to put it and sources you trust. I've got private places that I, private wallets, secured things, and all this stuff. But at the end of the time, if you want it to make money, you can't just leave it sitting in a wallet. You got to use it. And that's the thing. It's all about finding the risk level that is appropriate for you, which, if you're in the cryptocurrency space, is most of us are used to high risk. We just are. Like I said, markets seem to be pretty in the green. Bitcoin up 1%, Ethereum 3%. Let's see, the biggest mover in the top 10 is Ethereum with 3%. Cardano is doing all right. It's starting to get closer to Shelly. Crypto.com coin flipped Tezos, but it's dropping like a rock. I don't know why, but it is. Tron's still kicking around, way too little. Let's see, what has the highest 24-hour? Digibyte? Yeah, makes sense. Everyone's getting ready for the Coinbase listing, and Compound doing so crazy. Look, there's little Nexo, up 5%. All that fun stuff. Alrighty, guys. Well, that will do it for me today. Y'all have a great rest of yours, and I will be talking to you soon.